we're not worried about policy credibility in emerging markets per se, but we are very focused. There is a narrative about policy credibility in developed markets. And in particular, I think that's shaping how central banks have responded to the inflation threat that's already landed. I mean, obviously, we're recording this today, when we're hoping that a peace deal has been struck and that we've seen the peak of inflation. But that doesn't get over the fact that inflation in the US has, on all measures, got through 5% already.
I'm Tig Young.
And I'm Anna Bernasek.
And this is the State Street Future State podcast.
Each episode, we bring together expert perspectives on where the investment industry is heading and what that means in practice.
We explore the trends, decisions, and operational shifts shaping how firms innovate, scale, and deliver value in a fast-changing market. And with that, Anna, let's get started.
Thanks, Tig. And I'm very excited to introduce listeners to our guest today, Michael Metcalf. Michael leads the macro strategy team within State Street Markets, blending more than 20 years of strategy experience with academic rigor and alternative data. Michael's a key host and speaker at our ongoing annual State Street Markets Research Retreat, a global event series where top academic minds meet our unique proprietary data to produce key market insights.
That's right, Anna, and these retreats explore new research and the forces shaping the future of investing. And today, Michael is going to give us a background on these retreats and exclusive insight on the content and speakers that will be joining us. There are still a few retreat locations left, so it's not too late to attend.
Fantastic. So let's dive in. Welcome, Michael. We're very excited to have you on Future State today.
Thank you both. Well, look, I'm excited to be here. We're halfway through the 26th Roadshow, so it's your timing is impeccable. So I can tell you what we've learned so far, but also what we've got to look forward to.
Yeah, that's fantastic, Michael. But maybe just let's kick off and tell us about the Markets Research Retreat, just the background, how it all began, and what has the evolution of the event looked like through the years, especially after the partnership with TED that changed our delivery.
Yeah, of course. Well, so look, December of this year will be my 25th year at State Street, and when I joined, they'd already been doing them for a few years, and like many of our best research efforts, they came out of Cambridge, Massachusetts, and specifically actually around Harvard Square, where our think tank, State Street Associates, was based. Two clapperboard houses just off Harvard Square, and we would have the events in the Charles, the hotel around the corner. And the events that the kind of the core of them was always a partnership with leading academics from, so the original ones were, MIT's Rudy Dornbush, Mark Kritzman, Ken Fruit from Harvard Business School, and they would present on topics relevant to financial markets, and we then complement that always with applied market strategy, and then also where we had gaps, relevant external speakers from either academia, policy, or in fact politics. And I can tell you, so 25 years later, the idea of that mix of academic expertise, data, and market application, that hasn't changed really one bit. But how we deliver the conferences and the client experience over that time, I think it's fair to say has evolved quite a bit. And so you mentioned, so 12 years ago, State Street partnered with the TED Institute, where for 3 years they came in with content curators, their speaker coaches, and they partnered with our production team to put these events on. And I've got to mention that because I know the production team doing this podcast includes Joe Cowan, and he knows exactly because he was very much part of this. What we learned from that was that, I think from that point, the preparation, the event production, the staging, simple things like don't let speakers hide behind podiums. For a while, we even had a blue State Street dot for the speaker to stand on. And then, of course, the key lesson that you get from the TED experience is that content doesn't have to be long to be impactful.
That sounds amazing, Michael. And of course, you're doing this event across 19 cities, right? So I'm wondering, do you have different programs for different cities based on regions? I mean, how do you think about the regional variation?
Yeah, so 19 cities. It's a big ask, and I can tell you that that number's grown really quickly after COVID. I mean, we had 2 years where we did the thing entirely virtually for 2 years, which I can tell you was a challenge in itself. I never thought I'd be doing a live online fireside chat with a Nobel Prize winning economist from my spare bedroom in front of 800 people. But so, actually 19 cities is a much better swap for that. As we know with many things now post-COVID, there's a focus to be there in person, but also to be local. And so, when you take a year like this year where there are There's some very obvious top-down global themes, whether it be impact of war, pass-through into inflation, central bank reactions, several different impacts of AI, from applying it to the concentration risk in the market, its impact on productivity in the labor market. You've got those overarching global themes. But then it's also really important when we're going around, to have these local topics. And so for an example, and Ty, this is one for you. So we did our first event in Dublin this year, and we had Michael McGrath, who's the Assistant Secretary of the Financial Services Division from Ireland's Department of Finance, speak with Anne Prendergast, who is State Street Investment Management's European head. So you have a regulator and then the local head of an asset manager, our own asset manager. These are sometimes one State Street events, talking about the future of investing in Ireland as they take on the role of the EU presidency. So very local, very topical, impactful investors in the room. In Frankfurt and Milan, we had academics from local universities speaking on AI and machine learning. In Zurich, it's our second year in a row. And then in both London and the US, we're very focused on politics with upcoming elections in the US and obviously the potential change of leadership in the UK. Again, highly topical, and that's so far. And I can tell you, in the local twists of related to politics, regulation, or country exposures to global themes. And so I can tell you this will be a huge thing in APAC in the next couple of weeks. Where the risks of the tech bubble are particularly relevant for both Seoul and Taipei. And then also that central bank response to inflation is going to be really important in the events in Australia and New Zealand. So there's a whole range of things, but the main thing is to be a mix of global and local together.
Michael, that's spot on, because it's extraordinary. It's a great mix of academic theory, using proprietary data, and then real world market application. I mean, it's pretty unique, and trying to put all that together in one retreat is quite an accomplishment.
It's a challenge, I can tell you. I'd love to say that every event we do is perfect, but what it generally needs, what makes it work, it's really careful curation. And so there's the lesson from the TED thing there, that you have to do that very deliberately. But there's also just a lot of communication back and forth between the research teams themselves. So, for instance, my team, the macro strategy team, we sit on the trading floors, State Street's trading floors all around the world, where constantly seeing clients as our research partners, State Street Associates, and they in turn are constantly talking to our academic partners about the questions that clients are asking and the challenges that markets are throwing up. That just creates this really nice feedback loop effectively between clients and the academics themselves. And then, of course, our data plays a big part in this as well. So, we've always had our own data on investor behavior going back prior to the 25 years. And then after our purchase of PriceStats last November, who are a longtime research partner of ours through these events, we have data on inflation too. So sometimes the market will simply guide us as to where the academic work needs to focus. So, this year, as an example of that, looking at the pass-through from energy shocks into inflation and how central banks respond is a very obvious place for us to go. It's a feedback loop. And the one thing, and we say this at the end of every event, is that the feedback we get from clients is so important, because over the years, that has helped guided us where the research agenda needs to go.
Michael, just picking up on that, the academic partners. I mean, we have some of the top academic economists in the world who partner with us, right? Can you explain a little bit about that academic research and how it really works with what you and the team does?
The academic angle to this has always been and always will be the unique selling point for it. Because look, every bank has a research conference of some kind, but there aren't many where you could go along to a half-day event or a full-day event and see professors from MIT Sloan, from Harvard Business School in the same day. And quite often it's really fun that they will do their talks like teaching a case. And so so if you're in the audience, you're going to get asked a question. And so it becomes a bit of a challenge. And it's also a treat, because over the years we've kind of figured out what papers they should be talking about. And they've also learned our audiences. That's also really important. They've learned how to bring their papers to our audience. And so it really does make it relevant. And obviously, many of the professors have been with us for more than a decade. And some of them have been there right. Mark Christman has been there right from the start. And so he knows exactly what the people in the audience want to hear from his work. But the research is kind of fiercely independent and very reliable. You've got speakers like Alberto Cavallo from Harvard Business School, who are considered leading experts in their field. And so he'll be presenting papers being presented at the Kansas City Fed's Jackson Hole Policy Symposium, or ECB Sintra conference. So, he'll be presenting this work to central banks who are setting policy on inflation, and clients get to hear it firsthand, and then most importantly, be able to ask questions about it.
Michael, I'd like to shift gears a little bit now, and from your unique vantage point, just tell us a little bit about big picture. What are the big market themes you're seeing right now and how that's impacting investors?
There's a lot I could bring in here, and there's a lot you can say about how unprecedented, and you could use that word in all of its forms probably, how unusual and difficult the market outlook is today. But I think there's also, it's striking to me that some of the themes are actually quite similar to, the very first research event I went to was actually in 2002, and they had Rudy Dornbush and Henry Kissinger were two of the speakers. Kissinger obviously was talking about, at that point in early 2002, was talking about tensions in the Middle East and what that might mean for the world order. And Dornbush was focused on policy credibility and central bank policy credibility in particular. Both of those two topics obviously have been very high on the agenda this year. I mean, it's kind of curious going back to Dornbush's point about the scarcity of policy credibility and its importance, that today it's actually, we're not worried about policy credibility in emerging markets per se, but we are very focused. There is a narrative about policy credibility in developed markets. And in particular, I think that's shaping how central banks have responded to the inflation threat that's already landed. I mean, obviously, we're recording this today, when we're hoping that a peace deal has been struck and that we've seen the peak of inflation. But that doesn't get over the fact that inflation in the US has, on our measures, got through 5% already, and there's a big focus now on how the new Fed chair Kevin Warsh, who I should add is one of the few speakers, in fact, at the event that we've had back twice. He spoke in 2017 and again last year about how he's going to shape the Fed and their response to inflation. So how dovish or hawkish the Fed is, and obviously there's an assumption now that the Fed is going to be less accommodative than they were at the start of the year because of the inflation shock and because they're trying to regain credibility. Gets us onto the other question is, how on earth are markets performing so well, even though we're not going to get the policy accommodation that we thought we were going to get at the start of the year? And then that feeds on to, are equity markets overowned, and is AI a bubble? So I'd say in terms of top line themes, it's very much inflation, the rate response, and then AI concentration, are the things that they've been a thread throughout all of the conferences we've done so far and all the ones that we will do.
Michael, interesting. That's what went through my mind when you were talking about sort of top issues. I mean, a day doesn't go past where you don't talk to people about the equities market, right? I mean, what is going on there? How can the market go from strength to strength, not just in the US, but elsewhere too, right? So, I mean, is that what you're finding too? You're having a lot of discussions around that strength, and is it too good to be true?
You and I know this directly, don't we? Anna helps me put together our year ahead outlooks. And I think, I'm trying to think, Anna, from the last 3 years, that question of, is it too good to be true? I feel like we've asked that question every single year. But there's a behavioral thing there, isn't there? Because the answer to that question every single year has been, no, it isn't too good to be true, because the too good part, the earnings bit, just keeps on getting better. But obviously, at some point, that is going to be a risk. And it's a question of, when does that risk actually bite? I think that obviously we're monitoring investor behavior very, very closely, especially around earnings releases. We can see that there's a significant crowd in both US equities and tech in particular. But so far, investor behavior has proved very resilient. And the fact that we keep asking this question and markets are proving resilient is kind of rewarding that conviction. That all said, we do have very specific measures that are designed to capture market froth. So one of our academics, Robin Greenwood, helped us design this indicator. He's got a lot of academic papers on identifying asset bubbles. One of the flags in this asset bubble literature is issuance. Obviously, we're just getting issuance now, and so that's the beginning. So we're watching that particular indicator, and the probability of a significant market drawdown does seem to be rising. So too good to be true? So far, no, is my answer. But it is getting more and more bubbly as we go on.
Michael, you've touched on a couple of things there, AI, investor behavior, but just take debt issuance and inflation. The underlying political dynamics that are driving those matters and other related factors. Take the US and the UK. So how are the underlying and evolving political dynamics reshaping the market landscape and the outlook for investors?
The flip side of equity optimism is bond market pessimism. I could say we had a terrific panel in London with Mick Mulvaney, who was Trump's former chief of staff, but also budget director. And we balanced him with someone from the left, who was Alistair Campbell, who was Tony Blair's communications director. Obviously, you can imagine that those two disagreed on quite a bit, coming from opposite ends of the political spectrum. But the one thing that they both did agree on was on both sides, this difficulty of long-run fiscal issues and a political impasse on how to deal with them. There doesn't seem to be a solid plan to deal with long-run fiscal liabilities. And that is a problem, and it's a challenge, and it's something that we absolutely see reflected in investor behavior, whereby fixed income holdings are at 15-year lows, which contrasts with near record levels of equity holdings. On top of that, you then put in the kind of the political noise. I mean, and look, obviously right now we've got the midterms coming up in the United States, but then before then in the UK, prior to Brexit, having been quite a stable country politically, we're now regularly changing prime ministers through the change of leadership of parties. And your prediction markets suggest that we've got a very high chance of a change in UK Prime Minister this year. It used to be that politics was episodic, but now I think political risk appears to be quite systematic. So it isn't just all about AI and the good news in equities. There are real difficulties for fixed income markets, and the challenge for demand for duration in particular looks likely to stay impaired.
So, Michael, I know we're nearing the end of our conversation, but I just wanted to do two things. One, you mentioned signals and shifts, so I wanted to give that a plug to our listeners. And then two, ask you a final question. So just for our listeners, Michael and his team put out an annual publication in January that looks at the year ahead in markets. It's called Signals and Shifts, What to Watch. And then in June, they come together and write an update. What's new, what's changed, what they didn't expect. And that's coming out in a couple of weeks. So actually a week, I think, Michael, right?
It is, yeah.
On statestreet.com, you go to Insights, and I'm sure it's going to be on our homepage right on top on the front, and look out for that. And Michael, back to you. One last question. Can you leave our listeners just with one key takeaway from this year's retreats that we haven't yet discussed?
I would just say, quite simply, prepare for volatility. And this goes back to the market shifts and signals piece that you kindly plugged there, Arnaud, because you know that when the piece that we put out at the start of the year was based on this idea that when the allocations to equities over bonds is as high as it is today, it's the highest we've seen in really since just before the great financial crisis or just before the dot-com bubble. And there's a clue in both of these, is that behavior only gets this stretched in either pre-bubble or bubble bursting. When you use our prediction methodology, which only looks at the most relevant periods in history to figure out what happens next, is that what happens next when investors are as optimistic as today is that the returns that follow are never average. They're either very good or very bad. And so I appreciate I'm giving you a bit of a two-handed response here, but here's the thing, we said that in January, even before the economic shock that's just landed. And even if, and let's hope this is the case, that we are now got a permanent peace deal and that ships can start flowing through the strait again and oil prices will come down. Even despite that, we've had a huge inflation shock, which is potentially stagflationary. And yet, investors are still positioned incredibly optimistically. And so I think this idea of preparing for volatility, and you can't assume that we're just going to go back to this world where everything is super rosy. Markets are not well priced for this possible tail outcome of the bubble bursting. So I think volatility is the thing I will leave you with.
Michael, thank you very much. There's an awful lot to unpack there. And to our listeners, thank you very much for listening. And just to remind everyone that there are still a few more research retreat locations left. So register for an event near you.
Thanks, Michael.
Hey, that was fun. That was fun.